Welcome to Capital Market, live on Channels Television. I'm Will Ibang, and as always, let's check in on the markets. We begin with Europe, where markets closed high on Friday, tracking global gains as another volatile trading week comes to a close. The UK's FTSE 100 climbed by 1.19%. France CAC 40 rose by 0.2%, while the German DAX increased by 0.72%. European stocks still logged a negative week, down 1.3%, having closed sharply lower on Thursday as concerns about inflation and ominous earnings report from U.S. retailers influenced global sentiment. Now, shares in Asia-Pacific markets rose on Friday, with Hong Kong stocks leading gains as a volatile trading week comes to a close. The Hang Seng Index closed up 2.96%, while the Hang Seng Tech Index spiked 4.74% to end the session. Chinese stocks listed in Hong Kong closed higher, with Xipeng up 6.99% and Baidu rising 5.19%. Also, mainland Chinese stocks climbed on Friday. The Shanghai Composite closed 1.6% higher at 3,146.57 points, while the Shenzhen Composite gained 1.82% to close. Japan's Nikkei 225 rose 1.27% to close. In the U.S., rising recession fears pushed stocks briefly into a bear market on Friday, with the S&P 500's decline from its all-time high in January, reaching 20% at one point. A dramatic late-day reversal pushed the benchmark slightly into the green for the day at the closing bell. The S&P 500 finished 0.01% higher on Friday. The Dow Jones Industrial Average rose 8.77 points. The NASDAQ Composite fell 0.3% and is already deep in bear market territory, 30% off its highs. For the week, the Dow lost 2.9% for its first 8-week losing streak since 1923. The S&P 500 lost 3% for the week, while the NASDAQ shed 3.8%, with both posting 7-week losing streaks. Now back home, and as expected at the domestic equities market, the bears dictated the proceedings as investors took profits on bellwether stocks. The all-share index shed 0.22% to close at 52,979.96 points. Particularly profit-taking activities witnessed in the shares of Flour Mill, Lafarge, International Breweries, and MTN Nigeria led the weekly loss. Consequently, the month-to-date and year-to-date gains for the index moderated to 6.7% and 24% respectively. We're still in the positive territory. That's good news. However, activity levels were upbeat as trading volume and value increased by 66.4% and 16.9% week-on-week. Sectoral performance was mixed as the insurance and oil and gas indexes advanced, while the banking, consumer goods, and industrial goods indexes declined. Now, McNichol's consolidated PLC topped the gainers chart for the week, while Royal Exchange PLC led the underperforming stocks. The trio of FCMB, Jay's Bank, and Transnational Corporation PLC contributed 56.21 and 12.88% to the total volume and value traded in the week. Similarly, the NASD OTC Securities Exchange Index closed the week negative. The NASD Securities Index fell by almost 2%. The exchange lost about 19 billion naira in value. Also, there was a drop in total turnover. Volume and value traded for the week fell to 29.99 million units and 79.75 million naira each. Niger Delta Exploration and Production PLC led the gainers, while VFD Group led the decliners. Meanwhile, Food Concept and Central Securities Clearing System were among top stocks traded by volume for the week. Now joining me to review activities in the markets is Mr. Abel Ezekiel, Investment and Portfolio Analyst. Good to have you, Mr. Ezekiel.
Thank you. Good evening. It's a pleasure to be here.
So, Mr. Ezekiel, the equities markets opened and closed the week lower. Yeah. Are profit takers on the rampage now?
Yes, it's expected. You know, the market is not a one-way traffic thing whereby it will move in one direction. There are moments when you have some massive uptick of the prices. To get to a point whereby profit taker will set in, market will correct itself, some information will filter into the market that will take the pace. You know, some security will be overpriced at a point, some will be oversold, you know, region, some will be overbought region. So those are the fundamentals, those are the, the ingredients that dictate the pace, as we saw in the market. Definitely, as it stands, we are expecting, we are moving towards, June, whereby the earnings for second Q2 will start coming in.
Okay.
So it will moderate investors' reaction. Okay,
so we also saw a drop in the market breadth. We had 37 stocks, gaining as against, 50 stocks in last week's trading session. We had a very positive market breadth. What's responsible for this wide?
Yes, last week was really massive. If not for, I would say, to an extent, I was not even disappointed to an extent, because if you look at it, the value of trade in this week was even more than last week. Even this week, based on what you have put on out there, about 3 billion shares were traded, compared with last week, which is about 1.1 billion. You understand? So the volume is still high. So there's still a lot. Investors are actually strategically and rebalance their portfolio and looking forward to a better year and a better season, as it were.
Now, we saw that the consumer goods sector contributed significantly. They were like the third largest contributor to, the turnover for this week. But we're going to zoom in on, we take PRESCO, for example. PRESCO is one of, the stocks in the consumer goods sector that has done very well, released its full year and first quarter earnings and it was very impressive. Now, if we take a look, we see that they had a revenue for the company. The full year earnings, we saw about 47.1 billion, earned in the full year of 2021, and that's really like a 97.19% jump from what we saw in 2020, compared to 2021. And also profits after tax, we saw 19.82 billion naira traded there, and that represents a 276.8% jump.
Yes, compared with 5 billion.
Yes, compared to 5 billion, earned in 2020. So what's responsible for this massive, impressive result we're seeing here?
There are factors, you understand. Number one, if you look at it, it's about 2 years before the border were opened, our border were closed for activities. So most of these oil palm products that come across the border into the country, they could not find its way. So it gives PRESCO and other companies that are into agricultural food sector in that category massive opportunity, whereby the local consumers and the industrial usage of their products, patronize them. And again, if you remember, Indonesia as well has actually banned exportation of palm oil products to maybe to some African countries, inclusive of Nigeria. So to an extent, we have no choice than to actually patronize or to make do of our own sector or companies that are operating here. And it's not even PRESCO as well. Even Unclaimed did very, very well. And if you look at some of these companies, as well, they are expanding daily, and they are doing very well daily at the end of the day, and that is what led to this impressive outing that you are seeing. And again, I look at it; they have outstanding shares of just 1 billion outstanding shares. So definitely, it will give them, with that massive performance, to give them a lot of earnings, which stand at about 19.65%. 19.65 naira, out of which you are paying 6.6 naira. Turning. Using the remaining balance to invest with the company for expansion purposes, which is not a bad thing at all for them. So I expect, it was a very good report for them, and the market has actually responded with the movement. This year now, PRESCO has moved from about 87.80 to about 200 naira, where it is. Why is it about 127% increase this year within the last 5 months? So definitely a lot of good things are coming up from that sector.
Well, if you look at the unaudited Q1 result for PRESCO, we see that revenue for 2022, that's the first 3 months of 2022, was 12.22 billion naira. And for 2021, the same corresponding period in 2021, we saw 6.42 billion. But what's so interesting to see here is that the profit after tax in the first quarter of 2022 is is quite low compared to, if you look at the margin, the profit margin is quite wide. We saw 59.81% for profit margin in 2021, and then for 2022 we are seeing 47.62%. What's responsible for this?
Yes, if you look at it to start with, that's the PRESCO actually delayed the release of of their result because of the acquisition of a company, SEAT, which they have some interest in. And then this SEAT is owned by SEAT South Africa, which in turn has 60% in PRESCO. And this year, that transaction was consummated, which cost PRESCO kind of about 23 billion naira in cash transaction. So definitely that amount, it's from a borrow fund of which interest is going to be paid on that money, and that interest will go into their profit before tax and the rest of them, all those things. So it will eat deep into their their profitability. And that thing that you see, remember again, is that inflation pressure. As at December, it was about 15.6%, 15.40%. As at April this year, it has moved to about 16.82%. So those are factors. And the cost of running businesses, look at the gas, diesel, for instance. And diesel has moved from about 400 naira to about 700 naira. So all this one will contribute to the running cost of all this company, and that is what impacted, that you are now seeing this profit margin compared with the first quarter of 2021, getting higher than, despite the fact that we have 51.1% increase in profit after tax for 2022 Q1.
So at these earnings, we talked about inflation. So do we think these earnings are sustainable, looking at inflation?
Yes,
the outlook?
Considering the environment, and for instance now, most of their products which they put to the market is being used by all these industrial organizations. And then if you look at the exchange rate that is going higher now, it will compare some of these companies to start sourcing for their raw material locally, so that they will not earn so much. They will not lose so much on exchange, as I say, foreign exchange, as it were. You understand? So that is, to an extent, from the short to medium term, I think they can easily, sustain these earnings, as it were. Yes.
So let's look at oil and gas underperformed this week. Let's look at what we're going to zoom in on Seplat Energy, because they were in the news, this week. We saw that the federal government rejected their $1.28 billion, acquisition deal of mobile oil assets. The reasons that caused, we saw a bit of fluctuation in their share price, but, unfortunately, they still closed at the price they opened, which is 1,299 naira. So, the reasons the federal government is giving for this rejection or this denial of assent, do you think the reasons are, good enough, seeing that the sector could, increase the level of tax, the amount of tax paid to the government, and jobs could be created and things like that? Do you think national interest, the reasons that we're giving, national interest, failure to follow due process, application, are those reasons cogent enough?
I think federal government, if you look at it, PIA was just signed last year, which to an extent, it now makes NMP to become a limited liability company. The government company have been given, and the rest of them. And when that announcement was made, I think around January, NMPC was now wanted to obtain their consent of first refusal. That is to say, they are interested in that asset as it were. But because as at that time, the issue of PIA was not really clear. So as it has been signed, the government has signed, the president has put a seal to it. It compelled the NMP to now come out and say, okay, it's like they are in trouble, but that is really what the regulatory body is not saying. They are not coming up to say that. But if you look at, they are now even saying that it is not Seplat that you even compel them to seek for ministerial consent, that they should compare, because they said mobile producer is the assigner to the asset in question. So they are now they rejected the letter. They are now compelling, telling Mobile that Mobile should be the one that should send a letter for ministerial consent. So I think there's still a prospect or a way forward, because if you look at it, it is based on that information that actually compares Seplat price to appreciate. As at this time last year, it was about 585 naira. Suddenly, when information filtered into the market, despite the fact they did very well, they paid dividend and the rest of them, it moved to about 1,300 naira. You understand? And when the so-called rejection filtered into the market, you know, there was some kind of a low in its price. So I think there's, you know, it's not a total rejection. I mean, it's not something that I would say is we don't have a shot against them, because they are telling them to that issue. Ask more people to send a letter to them instead of separate.
Okay, so many Nigerians may or may not know about the backlog of unclaimed dividends that we have in the capital market. Many of them just invested and forgot about their investments. But the federal government, as at December 2020, we had a total of 170 billion naira unclaimed dividends, and that's what the Securities and Exchange Commission, you know, put out there, announced to the public, and has encouraged people to come on and claim their dividends. This issue is still lingering, and the SEC, as I mentioned, is working hard to resolve it. We still have in the studio Mr. Abel Ezekiel, investment and portfolio analyst, to discuss this with us. Mr. Abel, the issue of unclaimed dividends, we saw that what's really responsible for the rise in dividend? As at December 2020, we saw 170 billion naira unclaimed from 3 billion in 2009.
3 billion, 2009.
What caused this massive jump?
Yes, there are a lot of factors responsible. Major of which is the subscription, the rates at which people use fictitious name to subscribe for, you know, offers. As at that time, if you remember, there were those periods, were 2008, 2009, 2010, 2011, there were a lot of offers flooding the market. So people, just to benefit or take advantage because of oversubscription that was dominant in the market, then people use fictitious name. Not knowing that we'll get to a stage where we are in the history of this country, whereby we now talk of BVN, can be mandated. You can only have one BVN, and that kind of a thing. Definitely, if you have registered and you have a BVN, you cannot use any other name. So a lot of people are caught up in the web. So that is one of the reasons. It has been a hydra-headed issue, of which SEC is making effort. What has added to that is maybe some companies that are delisted too. Maybe some, you know, for instance, Dangote Flour had delisted, Mobil had delisted, all those companies, and definitely that monies too, you know, will be given. NBC had delisted, 7up had delisted. Their money too, we've add to the, you know, the current amount we're having. So it is an harder, and then you remember at the same time, talking of what led to all some of these things. Some people who are the beneficiary who will not go to the register to go and do the go to the High Court to go and do the letter of administration because of the cumbersomeness involved in it. You understand? Okay,
talking about cumbersome processes, we see that in April, the Director General of the SEC, Mr. Lamido Yuguda, said that the 170 billion naira has been remitted to the Unclaimed Dividend Trust Fund, which is being managed by the Commission, that's the SEC, and the Debt Management Office. Now, how has that process been? Is this a good move? And what challenges are there for this trust fund?
Yes, that process, it was something that had been mooted in the past, which shareholder kicked against, you know. But now here we are. SEC felt that would be the best thing. That is, to say, okay, to an extent, okay, come on, anytime you know, show up, they will pay you. Probably they will even give you a small interest on top of that. But for me, I see a lot of challenges about it. For instance, in the last, I have a client whose money we want to claim it from Dangote Flour scheme of payoff since about February this year. Up to now, we will not be able to receive the money. So the more we are trying to solve problems, the more even the regulatory body are even creating more problems. For instance, how would the regulatory body be asking an investor to come and prove or to come and show how many we applied for when Dangote offer was being made about 56 years ago? How would the person remember? So I would really suggest that they shouldn't, as much as they are trying to solve problems, not create additional problem in the system.
But I think they're trying to alleviate it. They created an e-dividend portal to try and ease or reduce the number of unclaimed dividends, you know, the occurrences that we see in that space. Now, as this, and they've even encouraged the investors to register. So how many investors have registered on that portal, on that platform, and how many dividends, unclaimed dividends have been paid so far?
I don't have the figure of how much dividend have been paid, because it cut across all the registers and all the companies. It's not coordinated, and there's no verified figure of how much is being paid or have been paid. But the number of clients or shareholders actually is over 1 million, as it were, on the portal, based on what SEC is issuing as a down. If you look at what we have now, if you do not claim your dividend, because that is even what I'm putting to the regulatory bodies now. If, for instance, now you do not claim your dividend within the first 12 years, that money is returned to the company to boost the earning capacity of the company. Okay, for instance, and so the point I'm putting to now to the regulatory bodies now is that if nobody, or if most of it, because it's necessary, is certain, it's not all the investors that go and claim their money. If you look at it, even people who graduate from university, it's not everybody that claim their certificate. To an extent, you go to some university, you see unclaimed certificate have been hanging there. So it's not new. It's not a big deal. It's not an issue. Therefore, if the money is not claimed, what happened? Because if the money, as it were before, you go back to the company, it will boost the earning capacity of this company for the purpose of declaring dividend in the future. But now it's not being yanked away from them and be taken to this organization, or this dividend management trust fund. If investors do not go, or people do not go and claim the money, what happened at the bottom line? And then another thing that I would want to share, let there be a more or less a less stressful process by which beneficiary of these investors can actually have access to their investment. Lagos State, for instance, Lagos State, they have what we call a small asset or little asset, which is below 100,000 naira, which is small. I expected them to even, that is, if you have an investment that's, they should increase that threshold of 100,000 to about 500,000 naira. That's okay. If the value of investment is about 500,000, you don't need to go through agony of layer and and the rest of them. They should increase the threshold, because 100,000 as it is now, it's too low, it's too poor. Okay. That would be my recommendation. That would be my advice to all of them. That's probably be looked into now.
Yes. Now, also in this week, there was something, a bomber that jumped into the market. We saw banks announcing to customers that they would soon start charging tax on bonds and short-term securities such as treasury bills, and even the interest on those bonds and treasury bills that you invest in. So, and this comes after the federal government has, I think a 10-year waive exemption period.
Yes,
why, in the first instance, we want to know, why was the policy even made? Why this policy?
Yes, this was, I think, around 2011, which became effective in 2012, 2nd of January, actually, where an executive order was given, or exemption clause. That is to say, to boost the bond market, because government at that time felt that they need to actually encourage, the bond market, federal government, state government, local government, and even what we call corporate bodies to borrow money in the name of actually boosting or providing this infrastructure, as it were, because you need money to actually do that. And that actually helped, because for the first 1 year, the bond activity increased by, as it were, by over 55%. And for the first 5 years, the capitalization of bond market was over 10 trillion. So it assisted. For me, I would say, oh, why now? Or why should it be that?
Is the timing right?
We have a lot of, what's called taxes over, in the system of, I wish, because 10 years, fine, where that order was given, and then it lapsed.
But we're wondering if the time is right now.
You understand? It's not as if it's a policy, it's just that it gives that gap, which elapsed this year. Okay. So I would have said, because of the rate of which we have a lot of tax, tax here and there in the system and the rest of that, I would have felt that maybe government should not give
extend
a room. Because even federal government actually borrowing money. It's still trying to make sure that they provide this infrastructure through the issuance of
So what are the expected reactions? What do you think investors or potential bondholders will be acting right now? What is the reaction we expect from them?
Bondholders, those who are caught in the system, they have no choice, because you're already taking a position, you're already a bondholder, you're already an investor. Definitely, you won't have a choice, but it's only those potential, those who may likely come in that, okay, now the tax is going to be, the exemption has been lifted. But meanwhile, there's a clause in the section 46 of VAT Act of Financial Act of 2021 that was just signed to law, which means that, which says that this exemption clause may not be applicable to bond market. But I don't know how government, but I think government will still go ahead with this policy because they need money, as it were. They need money to run the economy. So
we hope that the government will provide the right incentives to encourage investors and not discourage them from the fixed income space.
That is my hope.
So thank you so much, Mr. Ezekiel, Portfolio Manager, Portfolio and Investment Analyst. Thank you so much for coming on Capital Markets.
It's a pleasure. Thank you for having me.
And that's it on the program. Thanks for watching. I'm Willie Bong. Bye for now.